How to prepare a balance sheet when we have a trial balance with us. Remember, we have seen how to prepare a ledger from journal entries we have done. From there, we have seen how to prepare a trial balance. From trial balance itself, we have prepared profit and loss account also. Now, from the same trial balance, we are going to prepare balance sheet. So this is the format of balance sheet. First, you should write balance sheet as on. Remember, you have to write in the second line as on. Remember, it is as on. It was in profit and loss account. We wrote it as for the year ended on that date. But balance sheet is always prepared for a particular date. Okay. At any point of time, we should be able to prepare balance sheet. So balance sheet is prepared as on that date, whereas profit and loss account is prepared for the year ended. Now, you have to write balance sheet as on that date. Remember, balance sheet is a statement and it is not an account, so it won't have a debit side and a credit side. Instead, what it will have, it will have a liability side and asset side. So, liability amount, asset amount, it should come like this. Okay, I hope you all know what is that one specialty of balance sheet. If everything we have done from the journal entries to the ledger, trial balance, and profit and loss account, if we have done everything correct, both the sides of balance sheet will be automatically become equal. Now let's see whether we have done everything correctly. To begin, the very first thing we should be able to do is we should find out from the trial balance, we should be able to recognize which all things will come to the asset and liability side, or in other words, which all things should come in the balance sheet. So the ability to recognize assets and liabilities is very important to prepare a balance sheet. That's the very first thing you should have. Now here we have trial balance that we have already prepared. Now remember, when you are doing in a questions, they will give you trial balance. Okay, they will give you trial balance. From the trial balance, you have to prepare what profit and loss account and balance. Okay. Now we are going to recognize assets and liabilities. Do you remember what is an asset? Asset is anything that can be converted to money in future and that is owned by the business and that remains within the purview of the business itself. Whereas what about liability? Liability means anything that the business owes to someone else. It can be within the business, it can be outside the business, or wherever it may be. If the business have to repay something to someone, it is the liability of the business. Now remember, we are going to mark liabilities in orange color, and we are going to mark our assets in green color. Okay. So now let's see. The very first thing, it is loan account. Okay. Is loan an asset or liability? Don't try to buy hard, try to understand the logic. Now just think, is loan an asset or liability of the business? We know very well when we have taken a loan, we have to repay it, isn't it? We have to repay it once. So loan is of course a liability. Thus we can fill it with, yeah, orange. This is not orange. Let it be one color. Okay. Also remember one thing, liability will also always have a credit balance, whereas assets will always have a debit balance. So here loan, which is a liability, so it has a credit balance. Now we can move to the next thing. Rahman account. Is Rahman account an asset or liability? Remember, any account that we found in trial balance can be asset, liability, income or expense. Remember, income or expense. But notice one thing, income and expense are taken where? They are taken in the profit and loss account. We are not taking it to the balance sheet. So remember, from the accounts we have found in the trial balance, income and expense will go to where? Income and expense will go to profit and loss account. Assets and liabilities are marked in balance sheet. So we have found our first item to be a liability. Now the second item, Rahman account. Rahman account, remember, when we have a person's name for the account, please understand it would be either liability or an asset. It can't be income or expense. Income or expense will not be named after a person. Okay. Here we have a Rahman account because if you remember, Rahman was a person who wanted to paid 12 lakh rupees, who paid only 10 lakh. Now he has 2 lakh remaining to pay. Just forget about this story because we wrote it from directly from where? From the journal entry. So we know what happened, why Rahman is written like that. Even if you don't know, just remember when a name came, what does it mean? It should be either asset or liability. Here, the second thing to check is whether it has a debit balance or credit balance. When a person's name has a debit balance, it is pretty sure that it is an asset. So Rahman is an asset of the business. Now, gas bill. We know gas bill was an expense. Expense is taken where? Income and expense. Profit and loss account. Sales. Sales is the only direct income of the business, so it is taken where? It is taken in the profit and loss account. Drawings is also an expense. Advertisement expense, the name itself says it is an expense. Commission is the indirect income of the business. Salary is an expense. Carriage inward is an expense. Rajiv, remember the name of a person, so it is not an income or expense. Now, is Rajiv an asset or liability? Just forget about the story. We know the story because we have written from the journal entries. Just think you're a person who don't know why Rajiv is written here. Now, what is the next thing you have to check? Check whether it has a debit balance or credit balance. Since it has a credit balance, we can make it sure Rajiv is a liability of the business. Similarly, we have Raju Boy here. See whether Raju Boy have debit balance or credit balance. Raju Boy has a credit balance. That means Raju Boy is another liability of the business. What does that mean when we call Raju Boy a liability? We owe money to Raju Boy. We have lended something, either money or something in kind from him. So we have the liability, we have the obligation to repay to Raju Boy. 8 lakh rupees, we have to repay 8 lakh rupees to Raju Boy. So Raju Boy is our liability. Purchase is a direct expense of the business. Electricity bill is an expense of the business. Capital, remember, capital is the liability of the business. Why we call capital liability? Because the business, when we consider business as an individual, business has the liability to repay this amount to the owner of the business. The person whoever made the investment, it can be a single person, it can be a group of person, whatever it may be, the business as an individual has the liability to repay this 27 lakh to whom? The owner of the business. So when we take that concept into consideration, capital is a liability of the business. Now we have came outstanding salary. We know salary was an expense, but outstanding salary is unfortunately not an expense. This often confuses people because since there is a word salary, people misunderstand it to be an expense. Understand one thing. Any expense, okay, I'm writing it here. Any expense, if it crosses its due date, then it is our liability. Similarly, any income, if it crosses the due date, then it becomes our asset. What does it mean? Understand, think you want to receive an expense today. Sorry, you want to pay an expense today. Unfortunately, you are unable to make a payment today. So automatically in accounts, the expenses which were unable to be paid on due date become liability. Similarly, talk about income. Any income that was unable to be received on the due date, whenever we wanted to receive, after that date, it become asset of the business. Just think about Rahman. If Rahman had paid that 2 lakh rupees on time, then what would become? It would become our income called sales. But unfortunately, Rahman was unable to make the payment. So he made after the payment after the date he ought to pay, then it become our asset. Did you got the point? Similarly, salary was an expense which had to be paid on a date. Unfortunately, the business couldn't make the payment on date. Since the due date of the expense have crossed, it is our liability. This is a common theory to understand. Okay, so what I was trying to tell is outstanding salaries another liability of the business. Now we have water bill. Of course, bill it is an expense, not neither asset nor liability. Kitchen equipment being an expense. See, there is one common mistake that people make. They don't understand the difference between an expense and asset. I have heard people asking, okay, we have paid money, we have spent money to buy kitchen equipment, then why not kitchen equipment is an expense? There is a difference between expense and asset. When expense is made for long term, it is called our asset. Similarly, when an income, okay, when an income is repaid on long term, it is our liability. I think you would have get be confused. Just understand, when we make an expense and the benefit of the expense remain in the business for long term, at least more than 1 year, then we call it as our asset. Think about kitchen equipment. Will we buy kitchen equipment every year? No, kitchen equipment remains in the business for a long term. So the money spent, in your words, the expense made to buy kitchen equipment is our asset because kitchen equipment remain in the business for long term. Similarly, if an income that we receive remain in the business for long term, it is our liability. Just think about a loan. Yes, in another terms, loan is an income, money that we receive, but loan remains in the business for a long term and we have to repay it. So it is called our liability. Let this concept remain in your mind. It is very important to understand the basics of accounting. So kitchen equipment, when you think we have paid money to buy it, also think that kitchen equipment remains in the business for a long term. So kitchen equipment is our asset. Similarly, we have furniture. Furniture, we have spent money to buy furniture, but remember, furniture remains in the business for a long time and it can be converted into cash. Also, check one more thing, it has debit balances. Similarly, cash is also asset of our business. Now we have recognized our assets and liabilities. Now the things are getting more easy. We need to write them in our balance sheet and see whether we are getting a balanced balance sheet, whether our balances of accounts are getting balanced automatically. If it doesn't get automatically balanced, then it means we have made some mistake. Let's see what will happen. Now I have listed down the assets and liability, the terms in green is asset. And what we see here in this color, it's our liabilities. Before writing them to our balance sheet, we need to know two things. One thing is closing stock is an asset because it remains in the business even after 1 year. It's the stock that remains in the business even after 1 year. So closing stock is always the asset of the business. And one more thing, we can't simply write them in our balance sheet. To write in a balance sheet, we have a format on how to write things. It is called marshalling. Okay, a very simple thing. We should either write in the order of permanence or in the order of liquidity. To make it more clear, we should find, first of all thing we are going to write our assets. Okay, we should find which asset is easily converted into cash. Okay, so you should find among this asset which can be easily converted into cash. Of course, it is very clear. Cash is the way asset that can be easily converted into the cash. Why? It is already remaining in cash. After cash, which is very easy to be converted into cash, it is closing stock, isn't it? We have stock, we can sell it. Very easily we can convert into cash. After that, we have our debtors. Debtors in the sense people who are liable to pay back to the business. They have money owing to the business. Rahman is such person. So you just think you should have that logic in your mind. Being a human being, before selling any asset, being a human being, we can easily collect money from him. We can ask him to make the repayment, isn't it? So Rahman is more liquid. Liquid means what? Easiness to convert into cash. So cash was the most liquid. The number two was closing stock. Then goes Rahman. Then you have to decide between these assets. Which asset can be easily sold? Yes, kitchen equipment being something more worthy, it will take time. We can think it will be difficult to sell it. So furniture is more liquid. After that only we will sell kitchen equipment. So according to the order of liquidity, we can arrange our assets. Similarly, the liabilities can be arranged in the order of repayment, the earliness, the urgency of repayment. when we are going to repay these liabilities, which liability will be repaid back? You should have answered to that question in an order. So when you write in the balance sheet, we write in that order itself. Just think, out of these liabilities, which liability we have to repay first? Of course, it is outstanding salary, because once we have got money, we should pay our employee. Our employee, who is an internal part of the business, is the most important person among this list, of course. So before me paying to anyone else, we should repay him. So any outstanding expenses will be listed as number one in liability side of a balance sheet. Now, think we have repaid our outstanding salary. What is the next thing we have to pay? We have to pay our whom? We should pay our creditors. Creditors are the person to whom the business owe money. We have our liability to pay to Rajiv and Raju Bhai. We human beings, they are what, paid first before any loan, because loan being an institutional setup will have its own tenor, isn't it? Since loan has its own tenor, we will have time to repay it. We needn't worry about it. But Rajiv, if you want to learn something more from Rajiv, we have to settle our old bills. Same with Rajiv Bhai also. So this is the order. First we will pay outstanding salary or any other outstanding expense. After that, we will pay our creditors. Then we will go for any sort of loan. After that, what we will pay? We should pay the capital. Remember, always capital will be the last item of the liability side. Why? The business has the liability to repay capital to the owner when the business is wind up. Okay, only when the business is wind up, we have to repay capital. Till then, capital is not repaid. So it is sure that capital is always the last item to be written in balance sheet. Now we have got an idea. With this idea, let us fill the balance sheet. There is one more last step to be done in the balance sheet. I will tell you. Okay, you can see I have just copy pasted the assets here. But remember, we can't do like that, isn't it? We have our own order on how to do things I have told before. So we will do it in that order itself. We need to make some arrangements. So as we have told earlier, we will take the cash first. Copy here, the places here. The next one, the next liquid asset, as we told, is closing stock, because it is easy to what? It is easy to convert closing stock into cash. After closing stock, we know we can easily collect money from Rahman. So we are pasting it here. After that, we know compared to kitchen equipment, furniture is easy to what, convert into cash. So we are pasting it after. Then we can go the final and the last one, that is kitchen equipments. So we have filled our asset side. Similarly, we have to fill our liability side also. I'm just copying it from here. And we can simply paste it here. We will rearrange it. We had told earlier the very first thing we have to repay is our outstanding salary. So we can make it first. Copy it here. It's here. After outstanding salary, we have to repay our creditors. There is no order for in between the creditors, as we don't know much about them. We can pay as we can just copy and paste it as it is. Okay, we don't get bothered about that. Which creditor should come first? There is no such order. But before loan, creditors should come. Why? Because creditors are what? Creditors are what, human beings. So before paying any loan which will have more tenor, we will have to repay creditors first. So after creditors only we will go to pay our loans. So now we can, since we have placed our creditors, now we can go for our loans. Yeah. So anything else? Yes, only the capital. Remember, capital is the last liability we pay, because it will be repaid only at the end of the business year. So sorry, not the year, at the end of the business. When we completely wind up the business, only we will repay the loan. So we have pasted them in order. So we had the second thing, and now we are going to the last and final thing. We know capital is the fund invested by the owner in the business, isn't it? So it is owned by the owner. It is the claim of the owner on what? About the business. So we have to make one adjustment. What adjustment we have to make? We have to adjust the result of the business to the fund available with the owner. We know capital, the owner now have 27 lakhs claim over the business. In this year, if the business had made a profit, who deserves that? Of course, the owner who made the investment deserves that profit. Similarly, if the business had made a loss, who has to bear that? Of course, the owner, who is the only one investor of the business, has to bear that loss. Now we know the business has made a loss of 4,90,900 rupees. So here we are going to adjust that. Since it is a loss, we are going to deduct less net loss. The amount is 4,19,900 as I remember. I'll check it once again. Go to the profit and loss account, check here. The net loss is 4,19,900. Remember, if the business had made a profit, we will add that profit to the capital. Since the business has made a loss, we are going to deduct that loss from the capital. The final capital will be something after deducting this amount from here. Now we can see what is the final capital. The final capital after adjusting the loss would be 27 lakh. 2 lakhs minus 4,19,900. I want to remember you once again, since we have made a loss, we are deducting it. If we have made a profit, we would have added it. So the amount is 22,80,100. We can write it 22,80,100. Okay, this is our final capital. Now we can go for adding the total of liability and assets. Always the liability will be equal to assets. In other words, capital will be equal to asset minus liability. Just forget about it. We need to know one thing, whether the asset and liability side become equal. If it become equal, the whole journey we made from journal to ledger to trial balance to profit and loss account was correct, or else we have made a mistake somewhere and somewhere. Pray that we don't have made any mistake. One of the most exciting moment is coming up. We can first take the total of liabilities. It is 30,000 outstanding salary plus 1 lakh Raji account plus 8 lakh from Raju by account plus 45,000 of loan account plus 22 lakh 80,100 for the capital. We have 32 lakh 55,100. I'm writing it here. 32 lakh 55,100. So the liability, the total of liability of our business for the year or for the date as on 31st March 2024 is 32 lakh 55,100. We can see what is the asset. Here everything. We have a cash of 3 lakh 5,100. Plus we have closing stock of 5 lakh rupees. Then we have Rahman account of 2 lakh rupees. That means Rahman have 2 lakh rupees to pay us. The furniture remaining in the business as a worth of 10 lakh rupees. The kitchen equipment as a worth of 12 lakh 50,000. Yes, we have got asset equal to 32 lakh 55,100. That means our journey was right. So this is the whole journey. This is where we have understood what we have done is correct. So remember the process we made. We started with our journal entries. From journal entries, we posted them into ledger. Ledgers are accounts remaining to each and every item we mentioned in our journal entries. And we'll make a consolidated. Okay, wherever the salary is mentioned, the salary account will have the total consolidated. And we will, if the account is remaining to an income or expense, it is an income or expense, we will transfer it to profit and loss account, or else we will write balance carried down. If it is an asset or liability, we will write balance carried down. So we will find the balance. How to take the balance? Hope you remember. We should take the total of both sides and see which side has the highest total. Write the highest total on the total column of both sides. Then the side which doesn't has the highest total, find what is the difference, what amount can make it equal to the highest total. That is total of the highest side minus total of the lower side. That a balance amount would be written here. Since cash is an asset, we wrote it as balance carried out. But furniture, kitchen equipment, water, here it is an expense. So it is water bill, okay. It is an expense, so we are transferring it into profit and loss account. From there, we will move to trial balance. How we prepare trial balance? We will just take the balances. For example, outstanding salary as a debit balance, or it is written on the debit side. So in trial balance, we have to write outstanding salary. Where is it? Outstanding salary at the credit side, just opposite. We will make a trial balance. Trial balance is a pre-check. Okay, it's a pre-check before balance sheet. It makes sure whether we have done things correctly. If you have done up to trial balance correctness, we have done thing up to ledger correctly, the trial balance will become equal. Like the balance sheet will also become equal. We made it equal, so it was correct. From trial balance, we will prepare two things: profit and loss account to find whether the business had made a profit or loss. Remember, in profit and loss account, there are two parts. The initial part is known as trading account. So we call it as trading profit and loss account. The trading part only takes the direct income and direct expense of the business. The only direct income of the business is sales. Direct expense include opening store, purchases, bills related to main process, everything. All other expenses are indirect expenses taken at this part. All other income like commission or something is taken at this part. This is how we prepare trading profit and loss account. If our expense is more than our income, we call it our loss. If our income is more than our expense, we call it our profit. It will come here. Just the same as balancing. We will take the total of both sides, find where we have to add amount so that the total, both the totals become equal. Finally, we will prepare balance sheet. Just write down things from the trial balance, but remember you have to adjust the capital. Whether we have a profit, you have to add it. If you have a loss, we have to deduct it. Finally, if we get the answers on both sides equals, yes, we have won the match. Hope the journey was enjoyable and hope you understand everything. If you still have doubt, please let me know. I am there to clear it. Thank you all.